how are we doing? Morning Sammy, morning Stevie. Can you just let me know what the sound is like? I've got my new desk in here and the mic's in a slightly different place, so just let me know if the sound is okay. Hopefully it is. I can always move the mic. I like this elevator style of music. Yeah, it's very good. Morning, Hank. So is the sound okay? Yeah. A little bit low. Sounds good. Okay, cool. Cool. All right. So we'll start off with news this morning. Morning, David. So we had the New Zealand dollar rate came out at 3% this morning, which was forecast. Aussie wage index was down, so negative Aussie, positive New Zealand. And we had CPI come out at 10.1 for the pound this morning. Not a massive reaction off of that. I think the market kind of factored all this in already. So, as I said with CPI figures yesterday, we get a very mixed reaction on CPI. The market is factored in that inflation is going to just continue to go up. So they're not anticipating negative numbers. So when we get negative numbers, that's I think when we're going to get the impact on it. So apart from that, it's just kind of business as usual with the CPI. We did get a bit of reaction. We'll probably get a follow through for the rest of today on that, but no massive knee-jerk reaction to it this morning. Retail sales this afternoon at 1:30 for the US dollar, and then we've got FOMC this evening. So this evening is when it could all kick off. We'll see what happens with that, but unless there's anything in the meeting minutes which is unexpected, we may well have no reaction from that at all. There's no press conference, and the press conference is kind of where we tend to get a lot of the moves. There's no press conference forecast for FOMC this evening, so difficult to know whether that'll change. And then tomorrow morning we've got unemployment for the Aussie. So Aussie New Zealand impact. We obviously got the biggest reaction off of Aussie New Zealand because we had news on both of those this morning, and you can see the New Zealand dollar's had a big pump basically. So the reaction obviously off of the rates for the Aussie was negative. The interest rate coming out as expected was positive for the New Zealand, so we got a massive dump to 150 ADR on Aussie New Zealand. We tanked straight off of that. So New Zealand dollar pairs all moved to the upside, but all undone. As I say, it's all factored in. There's no real strength bias either way on the New Zealand at the moment, so hence we just got the knee-jerk reaction and back to normal. I've added another Aussie New Zealand position on when I woke up this morning, seen this drop and push back up. I've added another position on here. That's the only one I've got on at the moment because I took two off this morning. Well, I had traders on them, so I took them off this morning while I was asleep. So looking for a continuation push on Aussie New Zealand, just looking for it to continue doing what it's doing, which is ever so slightly grinding to the upside because the Aussie economy is better than New Zealand's. I'll run through the trades yesterday. Nightmare day yesterday. Sitting in just under 9% at the moment, but that is vastly due to this over leverage on the DAX that I've got at the moment, which I'm desperately trying to dig my way out of, but the DAX is just not playing ball at the moment. So I took a 0.76 loss yesterday on aggressive drawdown control positions. Banked 0.2 this morning. So what I've banked this morning was these Aussies. So had these Aussie positions on. Let's look at the hourlies. So we can see them. So Aussie positions were there and there. My TP on these positions was here, somewhere around there. And yesterday, the Aussie pushed up out of the highs, got within, I don't know, not a lot, 6 or 7 pips of my TP to get out of all of these positions. So that's my highest position there. My TP was there to exit completely on the Aussie. And it missed it just and then pulled back and we sat there. So I was like, fine. But because the news came out, I put trailers on the 2 positions that were in profit, that one and that one, because obviously the news was coming out and I didn't want to get all of these positions into drawdown. So the news triggered my stops, my trading stops, just about break even and a profit on that one. So left with that one, added on again, business as usual, continuing to the upside. But just missed my TP, and that is the story of my life yesterday. I missed TP on, I don't know, just short of 5% of profit. And the whole lot just basically either stopped out for a loss or has gone into drawdown. So it's just one of those days yesterday. Oil had one aggressive position on oil taken yesterday. As we continued this push down, basically yesterday we swept the lows from the previous day. So I took an entry at yesterday's low, assuming we were going to do the sweep. Looked like it was starting to play out, then it dropped, so took a stop on that one. Took a loss on that oil. What was the date yesterday? It was the 16th, wasn't it? Pound US dollar. Closed that one out as a profit. So nice profit on that one. Dropped very nicely. Closed out. So that was a pretty good trade. And the rest of the story is DAX. I think I've got all these on the chart already. But this is me attempting drawdown control yesterday. So, as you can see, that was the day before. So, got into a position on a drop, aggressive position on a drop, looking for this rollover down. Got stopped out of that one. So, got into a second one as we had a high push at the open. Got stopped out of that one here at the high. So basically got stopped out at the high of the session on the second entry, which is just unlucky. Then, as soon as I got stopped out of that position, we started to roll over. Probably better to look at this on a 5-minute chart, actually. So you can see why I was taking the trades. Whoops. So you can see there we pushed up, we put in a rejection, and then we rolled over, so I took an entry position. I looked to add on to that position in 2 spots. Dumped down, added on, dumped down, added on, and then just as it was coming down towards my TPs, which was set in this propulsion gap, it then pushed back up, stopped me out at the high of the pullback and tanked. So all of this lot would have been profit, something like 2.5%. So I got stopped out of the lot and I was like, brilliant, thanks for that. And then it started to tank again, so I added. And then I added again on the break. And then it tanked. But my TP was just under these lows, which I thought they were going to sweep, which was down here. So it came down just to the lows, missed my TP, and flew back up and stopped me out. Again, something like 2%. So I missed out on about just under 5% of profit on this. And at the time, I was in 3.5% of drawdown. So I could have done 100% drawdown control on DAX, be perfectly comfortable in a normal position. And then it pushed back up again. So I thought, right, we've just taken out those highs, we've hit that propulsion gap, good time to get in. So I took a short as we started to push down, stopped out. And not only did that happen yesterday, you can see this little 3.5 position. This is an aggressive drawdown control position that I put in. Yeah, it tagged me into that by less than a pip. Tagged me into a 3.5 entry by less than a pip and then screamed in the opposite direction. Didn't have a stop on that one. My fault, cocked it up. So now I'm in massive drawdown on an aggressive drawdown control position as well. So that kind of sums up my day yesterday. Possibly the worst trading day I've had in, I don't know, 3 months, 6 months, don't know. Literally, every TP I had in place got missed by a millimetre. every profit I had in place got missed. It was just, one of those days. So long and short, it's left me, I'm not bothered about the loss, it's irrelevant, I get that back in a heartbeat. But it's left me still in DAX. I'm not worried about anything else. Oil is fine, I've got a nice position in oil that I took yesterday. US dollar CAD, no problem. Pound US, no problem. Aussie New Zealand, no problem. DAX, it's because I over leveraged on it, and it's my fault for doing it. And every time you do it, you'll tell yourself you won't do it again, and then you'll do it at some point. So yeah, I've got to get out of this DAX. So my focus today is literally scalping the DAX. So yesterday I took 2 positions on the DAX up here as we pushed back up again. I'll show you the daily chart in a minute and why I took these. So I've got these 2 positions on, which I started to take on the rollover and added on the reversal alert. So I've got those 2 taken on this reversal alert basically, and then we've pushed up and we are just hovering on those at the moment. So the idea is to take these 2 down to here and then escape this aggressive drawdown control position as well to get myself out of these. That will give me somewhere in the region of 2%, and I should be sitting in something like 3% drawdown there. So I will use that drawdown basically, assuming these 2 work out and we do get that target hit, I'll be using that to get rid of 50% of those positions, because that one will be gone with that as well. Those 3 will be taken off together. So I'll be reducing that lot by 50% to get myself back down to normal lot sizing on it. It's going to give me a loss today, so I'm going to take another loss today on the DAX, but oil, hopefully, we'll get that pump today and I'll be able to get out of my oil position with a profit as well. So that's the plan today, is to do drawdown control on the DAX. But yeah, one of those days yesterday, just literally, you have these days where everything you touch turns to gold and you can't help but make money. Then you get these days where everything just gets to the point where it's about to make you money and then it says nah, and goes completely the opposite direction. And that was one of those. So you just have to take them on the chin. The best thing to do is shut the charts, walk away. Otherwise you just start revenge trading. Anyway, that was me yesterday. Not much fun. Morning Neo, morning Fabio, morning Shauk. Out of Aussie New Zealand, I knew news was coming. Yeah, so the Aussie New Zealand, I took those off on trailers. I'm not worried about the Aussie. This is a knee-jerk. It's a knee-jerk reaction by the market to the New Zealand dollar rate announcement. It's just a liquidity run. The New Zealand rate announcement was forecast at 3. It came out at 3. It's business as usual. The market isn't going to react to that because it's what we were expecting to happen, and because the New Zealand dollar is neutral, there's not going to be a massive push in either direction really on it. So we should see the Aussie continue back up. You can see I'm out at the highs, and in fact I'm going to get out completely of this thing. I've had enough of Aussie New Zealand at the moment. Aussie New Zealand basically, do you know what this is exactly? Do you remember last time I was in the Aussie New Zealand from here? I traded that, it pulled back, I traded it, it pulled back, I traded it, it pulled back, I traded it, and I milked this thing for God knows how much. And then I said here, didn't I? I've had enough. I'm fed up with this range. It's not going anywhere fast enough. It's tying up my exposure. And then what happened? Bang! Came out and hit the highs, which is where I had a target on every single one of these positions. I'm feeling exactly the same way. So if you want to stay in this, because when I get out of this, 90% sure it's going to come up and hit that propulsion gap. But up to you. Whatever I do the opposite. Why are you adding in stop loss orders? I'm going through the 5 videos which says not to use a stop loss. You haven't got through all the 5 videos yet, Joe. You'll get to one that's called drawdown control, aggressive drawdown control. They use stop losses, those positions. As Sammy has just said. Yeah. So yeah, Aussie New Zealand. I'm just going to bail on that because I'm fed up with it. Been in it for ages. So exposure at the moment, Aussie New Zealand, pound US dollar. So the CPI figures came out this morning on the pound. CPI is a very weird one. A very weird one. Basically, it's inflation, and some statistician companies give you the actual figure. Some give you the difference. So the CPI for Canada was released as the difference in CPI, whereas we are in the UK, we release it as the actual figure of CPI. But it says in here, actual greater than forecast, good for currency. That isn't true a lot of the time, because if inflation is at runaway levels, much bigger than we want it to be, that's not good for the currency, because it slows the economy down, which devalues the currency, because it gets to such a point where we start saying, right, I can't afford stuff anymore. You stop buying stuff, that slows down the economy, which drops the stock market, which drops everything down and devalues the currency. So CPI is a bit of a mixed bag with what happens on the result. That being bigger than we were anticipating means that our interest rates and our measures that we're putting in place to curb inflation are not working, which is not good for us. So you will tend to see a negative impact off of it. And this morning we got this negative movement. We got a big spike off of it, and then we got the reversal alert, and we're sitting there at the moment, market unsure. So there was no reaction to CPI this morning. I'm anticipating it being business as usual on the pound, which is negative, obviously. Pound is a whacking great short. So I've added a position again on this one this morning, slightly larger than normal, with a fairly wide stop. So this is, again, it's not an aggressive drawdown control position. It is just a drawdown control position. So 0.25 is 1/3 of my current lot sizing. My aggressive ones tend to be 50% to 100% of my open positions. So I'm taking a slightly larger position on it, just because I want to get on top of everything at the moment because of this monster. When I've got on top of that, then I'm absolutely fine. This is just a little out of control at the moment. So I've taken a slightly larger position on that with a view to getting out of the majority of my pound US dollar short. But I want to see it. I'm comfortable. Look, I'm within an ADR. I'm not uncomfortable on it. I just want to get in control of stuff at the moment. So I've got that on. I've got the Aussie New Zealand on, which is just the two positions. I've got my US dollar CAD on, which I've been milking to death. Beautiful trades on the US dollar CAD. Entered another position on that one, on this reversal alert this morning, well within an ADR. It's not going anywhere. We are in a very gradual downward decline on it. Canadian dollar is still weakening off of oil. So yeah, just looking to push up on that one. I've got one which has got partial drawdown control on from these initial ones, which you've seen me taking DD control on for the last couple of weeks. So yeah, just looking for a little bit more of a push, well within an ADR on that. And oil. Oil is the mystery at the minute. Oil, I have this 0.3. So again, as you can see on oil, I've got 0.23 on. I've taken a 0.3 this morning to try and get out of oil. Well, not necessarily get out of oil. It's got a stop on it. You can't see the stop loss, it's there. It's on that black line. It's on the support line at the moment. But this is a trailer. So this is either going to go this morning or it's not. If it goes this morning, I want to use this money from oil to do drawdown control on the DAX. So that's the reason for this. It's not because I'm worried about my oil position. My oil position's only got 2 trades on it, it's not in, 3 trades on it. It's not in big drawdown at all. So I'm not worried about the trade itself. What I am using oil for in this case is to get an aggressive position on it to try and get some large profit to offset against DAX. So I'm just basically hoping that because oil has swept these lows again, here, I'm hoping that that's going to give it the momentum it needs to push, and I'm going to use that to my advantage to do drawdown control on the other position. Okay, so that's the reason. I'm not worried about DAX, and there's no risk involved whatsoever for me. It's break even. I can't lose any money, but I can do a massive dent on DAX if I need to. So that's the reasoning behind that position. So that's what I've got on. That's where I am, and that's my day from hell. Forex Machinist is here. I'm telling you, all symmetrical triangles are going to be giving profits. They are totally different strategy. I traded them for ages, and I love them, but you got to use a stop with them. And yeah, you'll get some big runners. The key to symmetrical triangles is risk reward, and you will get really good risk rewards off of those, because when you get those symmetrical triangle breaks, they really work well. You also get a lot of fake outs on them, same as everything. It's a system, it's a strategy, it's a signal, the same as anything else. You're going to get winners and losers, but the winners tend to be big, because what you're doing with a symmetrical triangle is you're measuring contraction, and after contraction comes an explosion, which is why we get the propulsion gaps. Yeah, this is, it's really no examples on that page that are any use whatsoever. Not going to be able to find one now, am I? Let's look at a bigger time frame. There you go. Yeah, accumulation, push. Yeah, it's just a contraction before an explosion, and that's what symmetrical triangles are: contraction, pop. So yeah, you get big moves. So yeah, if this isn't a symmetrical triangle, but if that was a symmetrical triangle, yeah, when you get the break, stop under there, risk reward on them is off the charts if you can hold it. But that's why I did the indicator, because it's a brilliant pattern. Works really, really well. Ladder, yeah, them got me in quite some drawdown. Pound odd and pound CAD. Yeah, pound's been pushing a little bit recently. We should see some weakness now off the back of CPI. Now that's out of the way. Is there any settings you have all your past trades show up on chart? Yes, no, there's no settings. With account history, all you do is you just drag, obviously, onto the chart. If you want to see your past trades, there are indicators out there that will do that for you. If you go into the marketplace and look for show trades, I think it's called show trades. There's an indicator called show trades. I'm not sure if it's in the marketplace. Maybe Google it. MT4 show trades. There's an indicator you can put on your chart, and you can press a button and it will automatically plot your history for you, which I used to use, but I don't anymore. Go and have a look, you'll find it. Or get MT5, it's automatic. I don't get MT5. I'm on a few good profits right now with triangles. Cool. Second day. Yeah. Give me an update in a few weeks. Okay, DAX is coming down nicely this morning. This is what I need. DAX, I need you to tank hard today. Lovely, look at that. 2% gone in literally 10 minutes. Right, let's get on with analysis. If anybody's got anything specific they want to look at, let me know. Quick update on my Forex funds. Not good. Had a similar day yesterday to today, to what I had on my account. There's nothing. Pound New Zealand's the only thing really that's getting a little bit awkward at the moment, but I'm hoping that this is going to be a tricky one actually to manage now, because New Zealand rates have just come out and the pound CPI has just come out. New Zealand in effect should strengthen against most currencies apart from the Aussie. and pound hopefully will have a negative reaction to CPI. So I think this one might start to play out today. But yesterday I took a 0.26 loss. That was, funnily enough, was a DAX trade. So the only thing I closed out yesterday, 16th, was DAX, one DAX short. The reason I've got stops on these is because this is a funded account, by the way, Joe, just in case you're wondering. So I am position trading, but I'm position trading with an ADR based stop. So stop is basically, some of them are 1 ADR, but I've switched it to 2 ADR. So this is an old trade, so it's a 1 ADR stop. But all the trades I'm taking now are 2 ADR stops. There, okay. Just give them breathing room, but also an emergency stop, because obviously with my Forex funds, which is the prop firm I'm doing this evaluation for, you've got a maximum drawdown limit. So I have to make sure I emergency stop out of stuff if necessary. So everything hovering in profit, nothing anywhere near enough profit to bank. Yesterday was very much the same story. I could have banked yesterday something like 0.3 to 0.5%, but there was not enough really for me to warrant putting it in the bank, and everything was close enough to sort of the $300 mark that I could take it. So it's just done that since. So nothing's really gone anywhere. So everything's kind of in control apart from pound New Zealand. But I'm letting the EA run. The EA is just managing the whole thing for me. So I'll let it continue to manage it. We'll see where we get to today. But hopefully we're just going to get some of this today pushing and we can get that transferred over. And then if necessary I can deal with some of this pound New Zealand. But I get the feeling the pound New Zealand is going to come down. We're approaching some support here, right there, some decent support. So if it's going to tap ADR today, I think that's probably going to be it on this pullback and continuation leg down, especially after the news today. Positive New Zealand, potentially negative pound, so we should start to get some movement. But I'm still well within an ADR. I'm not worried about it. And don't forget, I'm trading this at quarter ADR intervals instead of half ADR because I'm aggressive, because I've got to pass it in 30 days. So I've got to get in and out faster, which in itself comes with more risk. So nothing you can do. That's prop firms. But yeah, it's not going too bad. Let me just see what I'm doing on here. One sec. Come on, oil. Need oil to push this morning. Doesn't seem to want to do anything this morning, unfortunately. Right, so ADRs. Obviously, we've got a few hit today. Aussie, New Zealand, you've missed it. Unless you're awake in Asia, you've missed it. The ADR hit was all the way down there. There was your first indication that we were going long. Reversal alert was too far away because it was a news trade. So you would have had to take price action. So the price action came off of 150, and we've had a lovely retracement off of that one. So you missed it if you weren't awake in Asia. New Zealand dollar CAD, same thing. We tapped straight into ADR, bearish engulfing, straight back down to source. New Zealand dollar Swiss, same thing. Pushed up, straight into ADR, bearish engulfing, and we're pulling back now pretty much to the source of the break. So no ADRs that we can trade because they were all instant hits during Asia, so can't do anything about that. Joe's just put in there order history.mql, so have a look at that. That will, sorry, I'm eating ice, bloody hot. That will plot your trades on your chart for you. So there's nothing on the ADR, there's nothing on the weeklies. Monthlies are the same as we've looked at previously. So monthlies I covered on Monday, same stuff. Weeklies, we've got nothing hit. We're on Wednesday. So anything that hits on the weekly ranges today is worth paying attention to. So if we've done our average weekly range by Wednesday, Thursday, we've got a good chance of potentially a pullback or reversal starting. So watch these for alerts today. RSIs on the hourly, we've got the euro pound at the moment. Again, as you know, I'm not long in the euro. I'm not interested in euro pound either, really. But it is extended. From a location perspective, we're tapping into this propulsion gap at the moment. Don't forget, as I keep saying, a lot of the times these will hit 50% of the propulsion gap before they get their reaction, and we are just starting to see this tick over. So you could get into this long now. Where it's going is difficult. If the pound is going to weaken off of CPI, this is obviously going to pump. But the euro obviously is massively weak. So you're trading a weak currency against a weak currency, which is why we tend to get a lot of this. You get a new spike, you get a load of that. You get a new spike, you get a load of accumulation. So it's not the best pair in the world to trade, but it is nicely extended, and obviously there's opportunities there for longs, but it's not a great currency. So it's only just extended on the hourly as well. If this thing got embedded below the 20, I'd be interested down there. If we can return to source there without having a profit take move, I think we'll get a big push out of it. But this is now on its 4th down day. So if you look at it on the daily, yeah, we're on our 4th down day. It's due at least a profit take move, but it's kind of doing that at the moment. It's just not moving far enough, so not particularly interested in it, but it's there as an opportunity. Pound Swiss extended to the upside. This one I quite like as a potential short. Obviously, it's a massive short and has been for a long time against the Swissy. The Swissy is now bullish, the pound is bearish, and we've got this lovely sort of pullback that we got yesterday, which gave us that extension. So we went from like not deep on the RSI, but it just shows you how strong that move was to take us straight over extension on the RSI. We haven't been up here for a while. So highly likely we're going to get a push back to the downside on this one. 4-hour chart, this is that support area that I drew in. Yeah, we bounced down, we tapped into it 3, 4, 5, 6 times there, couldn't get through, and this is our first retest, which has been rejected massively. Yeah, so as we broke through that level, we tried to break it, 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 tried to break it, tried to break it. Buyers just gave up and went nah. Okay, first attempt, big rejection. So it looks like a good short entry. Just about to get the M15 reversal alert on this one. So this looks like a nice short. Obviously I'm not taking it at the moment because I've got too much exposure on the DAX, unfortunately, so it's really restricting my trading at the moment, which is why I want to get out of the thing. Pound US dollar, I've got short on anyway, so I am already short the pound, but that's just about to give you an alert potentially. M5 you already had one, but yeah, looks good. Looks good for a short. Lovely area of potential resistance, lovely rejection, bearish engulfing on M15 there, and about to get reversal alert. You've got lovely propulsion gaps to the downside. That's actually part of the accumulation. That one has been tested 3 times already. So back down to there, and potentially, obviously, off the bottom. So lovely extension to the upside on that. You've got RSI divergence as well as an extra confluence, and this is actually an RSI chart pattern. Does anybody know what that one's called? Might make more sense if I do that. Think superhero. This is testing everybody, isn't it? Anybody done Steve Marrow's course? I'll let you ponder that one. Anybody? Who wears a silly hat with spiky ears on it? So that's pound Swiss. Gone. No, can't believe nobody knows what that is. Morbius. No, not Morbius. He has got spiky ears, but yeah, no, this is called Half a Batman. So there's Batman's cowls. Yeah. Basically, it's a multi-day M pattern formation, and the expectation is a drop. And you've also got divergence on it, so it's Half a Batman. That's serious as well. Yeah, there we go. Here they come. Look, Andy, Henk, machinist. No, Batman. Yeah. So yeah, you've got another one here. Look, that was Half a Batman. There. And basically, all it is it's an expanded M pattern, expanded multi-day M pattern. So it's basically a push, an accumulation, a stop hunt, and a drop, and that's what gives you that RSI pattern. And when you get divergence on it as a confluence and at a level of support resistance, it's a very good signal. So it's a good short. Obviously, like anything, it may or may not play out, but yeah, nice. And when you see these, you're looking for them there, and you're looking for them, inverse the lows on the RSI. So it needs to be upper RSI extension. It's a sign of exhaustion, basically. It's a strong push. It's a liquidity run of the shorts that are mean reverting the initial push, and then drop. So that's your hourlies. 4 hourly, we've got nothing, flat. We had a lot of extensions in place over the last couple of weeks, over the last week really, which have all played out. So there's nothing extended. The only thing we've got is still the Euro Swissy on the daily, and as I said, just not interested in anything but shorts on the Euro. So the extension is starting. We almost got a bullish engulfing yesterday. Very close to seeing some bear bullish action coming through. A little push up so far this morning, but again, don't really like it. I want to see an RSI extension to the upside. I want to see us getting back to the 24. We're just not getting there. So it's very, very hard to get in short on this at the moment. You need to be taking 60 extensions on the RSI really, but again, it's not really for me. But that is what you need to be doing at the moment if you want to get in short on it. So if we get any continuation push on the Euro this morning up into this accumulation, there's short opportunities there. I don't think we're getting in the 24 though. But at some point this is probably going to push, but not at the moment. So Mickey Mouse, yeah, it could have been a Mickey Mouse. A Mickey Mouse pattern would be like that though, wouldn't it? God, that's a really fat mouse, isn't it? That's not. I'm not a Mickey Mouse fan, so I wouldn't be able to draw it properly. Right, so let me just get the DAX up on my other chart 1 sec. Another monitor. Just pull it back. Okay, so I've stopped out of one DAX. Got trailers. I had a trailer on this one. Oh, what's going on? So I had a trailer set on that one. I think what I might do is actually just break even this one as well. And I'll set this to trail. Yeah, unfortunate. So yeah, stopped out on one. DAX is just really undecided at the minute. I really can't get the hang of this DAX at the minute. It's all over the gaff. So we'll do an analysis of everything else. Let's start off with the indices, seeing as we're on them. So, obviously with the DAX, we were looking at this gap fill for being a potential turning point, and we tapped into it, got some lovely shorts for a couple of days, then we got this big bullish engulfing, gapped up, shorted again off of the gap fill, which was lovely, and then we broke that gap fill. Since we've broken that gap fill, we've had nothing but bullish days. So we're on our third bull day basically. This is the danger zone. This 143.05 is the next resistance on this. There's nothing else in the way now at all. So this was a previous level, which I've got drawn in. We broke that yesterday. So either today we need to break back down below this level and show signs of rejection here, or the next stop really is here, which is miles away. Which is what's worrying me about this, which is why I'm desperately trying to at least get my exposure down to normal areas, normal levels, or just try and get the hell out of the thing. But yeah, we're not pushing hard, but we are pushing. So we're not seeing any massive volume candles coming in, which you would expect during earnings fortnight and stuff. Earnings fortnight gave us some decent pushes, but that's where I was expecting. This is the end of earnings fortnight, which is where I was expecting that turn to start, and we didn't get it. We got an accumulation push. So difficult to tell what's going on with the DAX at the moment. I'm in it. I've got to stay in it and deal with it. So Nasdaq pushed up again yesterday. It was a bearish candle, but they rejected a push down. So we did look like we were going bearish, but we pushed back up again. Starting to roll over a little bit this morning, which is good. S&P, same thing. We're on a 5-day push now on the S&P and the Dow. So both of those pushing very, very hard. We're coming up into this accumulation before that move down. Obviously, we've broken new highs. So market structure technically is now bullish. We've put in a new high. We've broken structure, and potentially that's the kind of movement that we should see. However, we still haven't got down to these support levels from COVID, which is where the market is calling for price to get down to. Whether it does or not, obviously, is down to the market. But if you look at where we turned here, that is not any real significant support resistance. That is what I would class as a proper support level. And if you put a fib on this, we are getting to the point now where we should start seeing some retracement. So this is the overall move. This is the most recent move. So we're in the 61.872 area where we would start to see normal structure complete. Massively extended on the RSI. There's a lot of people interested in shorting this at the moment, just not actually getting anywhere. So, Sammy, I don't know what to enter today. Don't enter anything then. Don't trade for the sake of trading. Trade when there's a setup. When does slow summer trade typically end? Usually sort of September. It's really when the kids kind of go back to school in the UK is when it tends to kick in. Don't forget London. Over 50% of all financial transactions go through London. The London bankers take a lot of time off in the summer. So it tends to be usually around about September, first couple of weeks of September it starts to pick up again, and then we slow down again at the end of November or beginning of December. But volatility at the moment is, this is normal volatility on the S&P. You can see obviously volatility at the moment is all over the gaff because of the recession that we're slowly sliding into. So even the summer months at the moment are putting in some pretty vicious volume. So it's difficult, but at the moment, to say the least. So, so yeah, obviously we are exhausted and still pushing. I get the feeling we're going to get just an avalanche of sellers entering at some point soon, and we're going to get a massive bearish candle coming, which will start a multi-day drop. I don't know when that's going to be, but we are very extended on all of these indices now. If we're in a bear market, and this is the trouble, when does a bear market end? Typically when it pulls back and pushes. You don't know until it's happened, do you? This is the problem with technical analysis. When you see something happening, it's already happened. That's where it started. Reversal alert down there, that's where this move started. When you see the pullback and confirmation, you've missed it all. And this is why everything in hindsight looks really, really easy to trade. Hard right edge, completely different kettle of fish. So at the moment I'm looking, I was looking for the 200 to hold, it didn't. I'm looking for any kind of bearish price action to try and get in fast and hard on the DAX. So oil, we are back down. Pre-COVID levels, obviously, pre-Ukraine levels we were trading at in this range here, sort of petered out around about the 90 to 95 a barrel. That's what we were looking at, 90 to 95 to be our area of support to start the next push on oil. Obviously the market decided otherwise, and we've had 3 down days on the trot now on oil, which I've been trading nicely, but we're kind of at a critical point now, where we're starting to think about breaking 85. If we break 85, I'll just go out to a bigger time frame. Our next stop is 73 is the next real support I see coming up, which is too low for oil. I can't see it getting down this low, and if it does, there's something catastrophically wrong with demand somewhere. Supply can be controlled, and this is why the oil nations make so much money out of it, and they have agreements in place to produce certain amounts, so they basically control price of oil by manipulating supply. So if I've got to, and this is why on Wednesdays, so this afternoon you're going to get the oil inventories coming out, which we get every Wednesday at 3:30. Basically, these are how many million barrels are sitting there, that ready to be distributed. If they wean those stocks down, they have to produce more. If demand stays the same and there's less supply available, prices will increase. It's pure supply and demand. It's the same way as any market in the world works. They have more control over this because they can control their production. Reducing the price is nice and helpful when we've got this massive energy crisis that a lot of countries are starting to go through now, where the prices are going through the roof of energy. So this is really where I was expecting to start to see a push, which we're not really getting. Pound New Zealand's just hit its weekly range. That's not good. Oh, well, I suppose it is good because it's hit its weekly range, so hopefully we'll start to get some kind of retracement off that now. And pound odd as well. Let me just quickly look at that. Pushing. So the pound's pushing. Let's things a little bit. Or is that Aussie? This is Aussie New Zealand weakness coming in at the moment. So the pound is managing to push against the Aussie and New Zealand. We've got weakness coming off the back of that that rate announcement from the New Zealand dollar. So yeah, oil is at levels, lowest levels we've seen for a long, long time. So it's looking very, very attractive as a buy to an awful lot of people. We're down at this support here. So this is really the crux point. This 85 to 87 a barrel here is really a good spot for technical analysis. We're extended down here. We've got divergence creeping in on the RSI as well. We've got big moves down. RSI is stable. So, we've got everything looking like we're going to start a rollover, but it's just spluttering. We're getting these nice little pushes, and then we get these drops, and then it pushes again, and then it gets a bit more of a drop. And it's like a car backfiring, wanting to start. I get the feeling we're going to get a big day coming in soon on oil, and it's just going to go. We've got obviously oil inventories coming in this afternoon, so that could be the catalyst, or after FOMC, don't know. But it's at a really attractive level to buy, hence me getting a little bit more aggressive on it down here. Probably going to get stopped out on this one by the looks of things, unfortunately. In profit, obviously, because it's above break even. But yeah, so oil I like the look of. It's just obviously from a daily perspective, we seem to be just at the moment trending very, very, very nicely to the downside, but they won't let this get too low. It will start to affect economies if it gets too low, but there is an awful lot of pressure on the oil companies at the moment to keep prices low, because cost of living, inflation going through the roof. Inflation will reduce energy prices and what we can pay for them, but it's down to governments to cap energy pricing, regardless of what has to be paid for it. So the oil companies don't tend to worry, or the oil producing countries don't tend to worry too much about what they do with price, because individual countries cap prices anyway. So looks like it's bottoming out, but I thought it was going to be bottoming out back here, and we've just kind of gone through a period of not getting anywhere, and now we're in another accumulation. So hopefully this is the last hurrah before we get the push, but we'll see. But yeah, very cheap at the moment, oil. Sammy, you braked enough yesterday to take a rest today? Yeah, do it. If you've hit your target, take time off. That's the whole point of trading. You're in control of your lifestyle. Bloody DAX is coming down again. Could the Inflation Reduction Act have anything to do with this downward pressure? I have no idea. Don't know. Could do. Pan New Zealand's hit ADR. Yeah, the Inflation Reduction Act probably won't affect OPEC and oil producing countries. It probably is something more about the trouble with oil at the moment as well is obviously we've got Russia controls the biggest pipelines in Europe, and they go through Ukraine. So we've got this whole other countries having to step up and supply, where we haven't normally bought that volume, and obviously there's a little bit of a bidding war going on at the moment to supply oil as well, which isn't helping these prices, I think. But even so, we're down pre-Ukraine pricing now, so we should see at least a stabilisation, I would think. But like I keep saying, the market does what the market wants to do, and there's nothing you can do. We can't control it, we just have to get on. If we're wrong, we have to deal with it. So that's what I'm doing. Right, so that's the indices and oil covered. Anybody trading gold, don't know, can't help you, don't trade it. But bearish up here, and it has come down. That's what I said. Well, it hasn't actually, it's gone sideways, so it really hasn't gone anywhere, has it? But it's just another US dollar cross. If you're bullish US dollar, short it. If you're bearish US dollar, long it. Up to you. It's a US dollar cross, same as anything else. Right, so that's covered everything on the RSIs and ADRs. Pound New Zealand, we just had the ADR hit on as well. So Pound New Zealand, good opportunity for a short on the Pound New Zealand. We've got the ADR hit, we're just rejecting at the moment. Up at ADR. Levels wise, So we're tapping into this support resistance at the moment. So potentially this is a nice area to find some sellers. Somewhere around here. It's potentially a good short. This is a better short here. It's much more of a level that I'd be interested in. 125 ADR. We've got the 24 coming down on top of us up there as well. So you could take an initial entry there, a second at 125 if it gets there, and then just trade the pullback on it. So it looks like a nice ADR reversal today. New Zealand dollar rate announcement should be neutral to bullish for New Zealand. CPI for the pound, as we can see from the rest of the pound pairs, hasn't made it bullish whatsoever. So this is just the Australasian pairs having a bit of a weak moment. So looks like a nice little short opportunity to me. Obviously I've got this short on the my Forex funds account at the moment. So right, let's have a look at everything else. Would you mind looking at pound odd, pound CAD, kind of stuck in the shorts? Thought of closing pound odd in a loss. So this is obviously just a movement based on the Aussie New Zealand news. So obviously New Zealand news, Aussie news was weak this morning. Wage price index isn't that indicative of much at all, to be honest. It's just, and it's only a 0.1 miss. So basically, it's what we were before. Hasn't really changed. So what that's saying really is, although it's a negative number and people will see it as negative, it's just wages haven't really changed in the last quarter. It doesn't really impact anything, does it? Apart from the fact that inflation's going through the roof, cost of living's going through the roof, and people are not earning any more money, obviously that's not good for people, which means governments have to step in and do something about it. So not particularly strong or weak. That is as expected, which would be typically strengthening the New Zealand dollar, but that isn't the reaction that we got this morning, was it? So again, a lot of this stuff is being factored in. The market is expecting interest rates to go up. If they don't increase interest rates by what they're expecting, then you would expect a reaction, but otherwise it's business as usual to increase interest rates every month, quarter, whenever you do it. So pound odd, we're coming up to a nice area of balance at the moment, which is a previous support resistance level. So somewhere up here, hopefully you will start to get some kind of pullback. Pullback will be down to these sorts of levels. It could well reverse. Look at it long term with the pound against the Aussie. Yeah, we've broken these lows, so we had this big push. We were sat in an accumulation for many months. Price discovery, and now we're back in to this level, but bearish. So it's overall bearish, but very weak. Same with the pound New Zealand. It's just very accumulative, not going anywhere. Pound CAD obviously is a short. It's holding up because of CAD weakness at the moment. But yeah, I still like it short. CAD will strengthen, and the pound is just weak. So you shouldn't be too deep in this pound CAD. You would have got in. I mean, I don't know where you would have got in. If you're going to short it, around there somewhere. Shouldn't really be too deep in this. I mean, it's not really moved far. From the lows to the highs, you've put in about 3.5 ADR. So if you've been scaling into, even if you took a short here and you were scaling in, you're at break even on it. But still like it short. Aussie CAD. So I'm just looking at the DAX. DAX is just double bottoming at the moment, potentially. I've got another entry below that low. So if we break that low, jumping in another one down to those lows there. Okay, Aussie dollar CAD. So Aussie obviously against the CAD is weak. We've got this weak Canadian dollar at the moment, which is giving everything a little bit of a push. We've had the reversal which is pushed back down again off of that extension. There's a lovely short trade up there. We are just doing a gap fill as well. So just completing that gap fill. That one we came up and completed. That one we've now come down and completed as well. So it leaves kind of the market open to go where it wants. We're needing some Canadian dollar strength. We've got weakness on the Aussie at the moment, which is bringing this one down. So there's no real opportunities at the moment to get into this. The opportunity was back here last week. And obviously if you'd have taken that one, it's very, very nicely played out. Aussie dollar Swiss, again sideways, no real idea on this one at the moment. I'll be more bearish than bullish based on Swiss franc rate increase, and all we've done since the rate increase push, which lasted for a good week or so, is accumulate. So we're just accumulating before potentially the next drop. So you can look for short opportunities on this. Just take reversal alerts short and you should be okay. Any RSI extensions to the upside. Would be good as well. Yeah, but at the moment it's not going anywhere, it's just being held in a holding pattern. But anytime we push up into the highs, short opportunities on it. At the moment it's just not in the right spot. Aussie dollar yen, no idea. So yens, I'm still on the shelf. I really am on the shelf with yen. I've got no idea what is going on with the yen at the moment. It scares me because it could go either way at any time. And it's basically down to Kuroda pulling his finger out. The US dollar, the yen, the euro and the pound are the biggest, strongest currencies out there. When you get some strong fundamentals on one of them, they tend to take control and they will just go. The yen has been very, very, very quiet. And so has everything else. So any kind of yen strength, if this thing decides to power up, if they announce a new bond purchase plan, if they announce any kind of change in their forecasts for inflating or deflating the yen, we're going to get some big fast movement on it. And I just don't know which way it's going to go or when at the moment. So with the yen pairs, I'm still bullish on them, but I need a really good reason to get in. This drop here, if you remember a couple of weeks ago, I played that long on the Swiss yen. I would still be looking for long opportunities, but I want to get some proper extensions on the RSI to get in long on this. I'm not interested in taking weak, willy-nilly trades, sort of out of middle of ranges. I want to see some decent movement to the downside to take some longs. So all the yens, I'm just going to cover them all now. They're all the same. CAD yen sitting in the middle, Swiss yen sitting in the middle, pound yen. Yeah, all sitting in ranges, big, 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 wide ranges. We're sitting in the middle of them. So there's nothing of any interest whatsoever on any yens. Longs, yes, taking them down here is where I'm interested. You know, things like this. It's not very good Batman. The Batman is like that, and then you get either a flat or a kind of a rounded, and then another distinct ear. That's more of a W pattern. But divergence, yeah. So I want to be extended on the RSI, and I want a decent reason to get in after a strong push. So none of these I'm interested in at all. I was short on AC, got a nice profit from it. I want to long it now. Yeah, it can do. I'd be worried about longing. What's the reason for longing it? I can't really see a reason to long. But I mean, yeah, if you want to take it long. just bear in mind, if oil pumps, Canadian dollar's going to pump. If Canadian dollar pumps against a weak Australian dollar, this thing's going to come down here somewhere. If short term at the moment, though, yes, it's a long, definitely. But I don't know. It's not. I just need it to be extended. Aussie New Zealand, as you know, I'm long on this one, and I'm about to get out of it. So when I get out of it, there it will fly. You heard it here first. That's what it always does. So I'm not going to hold it anymore. I just need to get rid of some exposure, and I'll take the profits on that one if we get another push up to the upside. But still like it long. Aussie dollar typically is stronger, although it is starting to roll over at the moment. Either way, this thing just moves so beautifully all the time. Anything with a low ADR always has beautiful structure, and where there is beautiful structure, i.e. pushes, profit takes, pushes, profit takes, pushes, profit takes, you would always be able to make money, because you can always get into 3 or 4 positions and you can always get out of it because it moves all the time. As long as it's doing that, if we enter there, there and there, when it does that, we get out with a profit. So it's a beautiful pair to trade, just a very small ADR. Like it long still at the moment, but yeah, as I say, it's very, very, very up and down. Aussie US, again, US dollar still confused as to short. We got this bounce off of the fib. Aussie dollar's coming down hard at the moment, not because of the US dollar, mainly because of the Aussie dollar. We have got a bit of a strong US dollar this morning as well, which is lovely for the DAX. We should get some decent downward movement on the DAX. Just about to get a short one more. So Aussie US, I'm still short on it, in the hope that they're bullish on FOMC. I don't really know at the moment what they're going to do with the meeting minutes of FOMC, but if it comes out as bullish in any shape or form, we've got Euro New Zealand as just the ADR as well. We should hopefully see a little bit of strength off of the US dollar, but I'm not 100% sold on the US dollar being that strong at the moment. I'm very kind of neutrally strong on US dollar. So I'd still be looking for short opportunities on everything against it. This is the extension, and the trade's playing out very nicely if you took that one. But at the moment, it's obviously, we're waiting for a pullback to short again. CAD Swiss, still don't really know what's going on with this Canadian dollar weakness. Swiss franc strong, Canadian dollar strong. So therefore that sort of movement. You can kind of take any RSI extension on this at the moment. If you've got a strong currency against a strong currency, it doesn't really matter which extension you take, you're going to get some kind of pullback or profit take move off of it. So any RSI extensions up or down on CAD Swiss at the moment are fair game. Obviously if it fits into your portfolio. Every time this one's got extended, I've been in something else and not been able to take it, mainly because I've been stuck in the US dollar CAD for a couple of weeks milking that. So but yeah, CAD Swiss, long or short, at the moment it's more of a short based on the Canadian dollar weakness, oil prices, and the fact that the Swiss franc pumped its rates. So I'd like to take more shorts than longs on it, I think, at the minute. But it's not got anywhere that I'm interested in, so I'm not doing anything. Cover the yens. Euro odd, short, everything's short. Euro, continuously short euro. Any extensions to the upside on this, on 4 hour or indeed on the hourly, you can take, and you'll be fine taking shorts. So if we get a push up to there, yes, I'll be interested in shorting. But I want to see an extension to the upside. And at the moment, with the Australian dollar doing what it's doing, we've got a good chance. So downward, and then take reversal alerts to the downside. Euro CAD, same thing. Canadian dollar weakness has caused an accumulation on this. Euro is weak at the moment. The CAD is weak. It should be stronger, I think, but it's not. So we're getting an accumulation. Still interested in shorts. There's only been one real signal on it. No one there. So yeah, just waiting for it. But on the hourly, you would have had more entries on this one. So you see you've had a few shorts on the hourly that were good opportunities, didn't quite get there. Nice 3-bar reversal, beautiful 3-bar reversal example there. Push, rejection, confirmation, short. So yeah, like that short. Not in at the minute. Euro Swiss, short of all time. Just short. No entries. Last entry on H4 we had, and this was in June. Again, hourly, if you're dropping down to lower time frames, that's your opportunity. We still haven't had one since July. So it's just really hard. All these euros are very, very, very hard to take. You just know that the time you go, let's just get in short, because we know it's not going to get there. That is the one where they're going to suddenly announce, Lagarde is going to say something and the euro is going to pump. So it needs to be extended, either on the hourly or the 4 hourly, or if you're scalping M15, it needs to be extended for me to get any kind of interest short. But Euro Swiss, still short. Euro Pound, again, ADR's dropping on this. We've gone from sort of the 60 to 55, 50 we were at yesterday. We're now at 48. This thing's just shocking. Which you'd expect. It's the euro and the pound, big trade partners. We like to keep our prices stable so it doesn't go anywhere. You can kind of trade it from any direction at the moment, and wherever you get in, if there's been a push, it's likely to be off the back of some news event. You'll be able to get a retracement off of it. I'm not tying my money up in this because of the ADR. So, but I know some people have been trading it, and yeah, you'll get in and out. It will just take a while. It's just a slow moving pair. So if you're going to pick your money to tie up your exposure, pick ideally, if you can, if there's multiple setups and one of them's 180 ADR and the other one's 100 ADR, pick the 180 ADR. It's just going to move faster. It's going to happen faster. You're going to get out faster. The more you can get out quickly, the more you can free up that exposure to trade other pairs. Euro Yen we've covered. Euro New Zealand short. I've got my alert set. I'm just about to hit it as well. Okay, so I've got an alert set here. You can see, it's really difficult to see these alerts, but I've got an alert in there for short opportunity on Euro New Zealand. We just about hit. No, we're not even there. There's no strength. See, this is the trouble. There's no real strength in this move. This is just New Zealand dollar weakness. But this level here, 161, 386 is what I'm interested in, which is this gradual move down. We started to find a level where we weren't interested in going lower. Found that nice support. The fourth time, remember I keep saying 3 taps on resistance, the fourth one tends to smash through the door. So think of it like you battering ram against the door. Hit it, hit it, hit it. The fourth time, if you smash it, likelihood is you're going to be able to run. And that's what it's done. Next time it comes back to there, we're interested because it's likely to reject. Everybody that caused this breakout short is going to be adding to their positions and defending that level. Yeah, so we should be looking for short opportunities there. So Euro New Zealand is a nice looking short. It kind of hedges me on my Aussie New Zealand, which I'm just about to get out of. So I might take that. Oil I'm stopped out on. It's going to be one of those days again, I can see it. So oil just banked a little bit on that. It's a break-even-ish trade. Where are we going today? So we've just taken out the Asian low. So we're either going to get a reversal alert here, or we're going to come down and test yesterday's low. So I'm going to, I just want to get some volume on this in a minute. Okay, so I'm going to take that reversal alert. I'm also going to put a pending down at these lows. So I'm just putting some stops in place on these because these are aggressive positions. And as I say, it's not. I'm not getting aggressive on this because I don't like oil. I'm getting aggressive on it. That's way too big. Because I need to do drawdown control on the DAX. So I'm just looking for instruments I think have got a good chance of pushing today or moving today, so that I can get some drawdown control off the DAX. Where did we get to? Euros I covered, hadn't I? Yeah, Euro New Zealand we're talking about, won't we? So there's that level there on the Euro New Zealand. The reason I've got the alert there is because I'm interested in that wick, but I'm also just interested in this level roughly around here somewhere for a potential short. So next reversal alert on M5. We've got an ADR hit on this as well today. This looks really nice. So I might get short on this. $13.14, so Euro New Zealand. Okay, I'm going to take the next short, Euro New Zealand, which will be here, basically, so rejection of ADR. We're getting really close, so I'm just going to cancel that alert off. It's close enough for me. It's an area, it's a rough zone. The reason support resistance works is because people have limit orders. Banks have limit orders. So this area here typically has been rejected in the past somewhere in this zone. Yeah, so somewhere around here. If they're going to defend a short move on the Euro New Zealand, there'll be limit orders set here, and you'll see price start to just go like that, and that's when you get your reversal alert. So I'm expecting some limit orders to trigger in there, which will start the next leg down if we're going to continue leg down into these lows. So that's why that trade. Euro US dollar short, again, I'm in pound US dollar short at the moment. Like it still as a short. Wanted it short up here, couldn't take it because I had double exposure on the US dollar. Remember I was saying that I'd love to take this. This is a beautiful entry up there. I couldn't take it because I was overexposed. There was lovely divergence. It wasn't that great actually. I thought that was more of a double top, but it's not. But it was divergent-ish up there, and it was at a level of previous resistance, support, turned resistance. So yeah, and it's a lovely extension on the RSI. So it played out very, very nicely, that trade. And still like it short, but can't get in really down here, waiting for some kind of pullback. So once you see these moves starting, so if you miss an H4 move, and you can see it worked out really nicely, you can get in on the pullback. And the way to get in on the pullback is often move down a time frame and get in on the next RSI extension on the lower time frame or on the entry time frame, which would be now really, and assume that trade is going to play out. So when you get a reversal alert on the 4-hour chart, which you've got there, which isn't a particularly pretty one, what you're doing is you're entering the retest on the 4-hour. So as it pulls back into this zone here, which is where we had our high and where the reversal was, which in this case is quite big, somewhere in there if this reversal alert is going to hold, we're going to retest this area before the next leg down. So somewhere in here, if you get an RSI extension on M15 or an H1, and then a reversal alert, that's your entry. Yeah, so here, yeah, we didn't get the retest on this, but if this had pulled back, these are the best entries. H4 retests on lower time frames. Really good trades. But yeah, so that's where, but at the moment obviously this is coming down. We've got a bit of US dollar strength in there this morning. DAX, I've triggered my next entry. So average on these two is here somewhere. So I'm just going to put a stop on this one there. This one's going to make me $172. That one's going to lose me 100. So guaranteed to make money on these two positions. Really just want this to do that. Get down there before it does another pullback. As I say, at the moment stuff's just not playing ball. Euro US dollar, pound odd. Pound odd like short still. Good ADR hit potentially on this one this morning. This Australian dollar and New Zealand dollar push, still don't think that's going to be sustained. Drop. Don't think that's going to be sustained. So still short. Not got an RSI extension there. Likely to get an extension on the hourly. You are extended on the hourly. Pound odd. 69.60. You're just about to get an alert on that on the next. Well, you're not actually. It depends whether or not this pulls back in the next 45 minutes. But if this pushes up, you're going to get an RSI extension alert on there at ADR, at a previous level of confluence, and a propulsion gap. Short. Looks lovely. Pound odd. Pound CAD. Again, like it's short still, based on Canadian dollar strength, which we are waiting on oil strength, which we've still got that bearish pound. The CPI figures this morning, not particularly useful or unuseful to the pound, so business as usual. Look for short opportunities, not extended on the 4 hour, not extended on the hourly. Last entry you had was there and there. So good short opportunities on pound CAD, just waiting for it to pull back a little bit more. Pound Swiss, same thing. Pound Swiss should be extended on the hourly. Just come out. And, oh yeah, was this the Batman we were talking about? It is, isn't it? Divergence. Batman. Beautiful short starting there. Pound Swiss. Anybody getting that? Reversal alert on M15 you just got. Oh, I'm tempted to take it. I've got too much of. This DAX is stopping me taking entries. It's really annoying. It's my own fault. It's stupid. But anyway, pound Swiss, beautiful short entry. Pound yen, don't know. Pound New Zealand, lovely short entry. So we've hit ADR on that one. Waiting for the next reversal on that one to get in short. Looks great. Not quite extended there. Hourly, we're coming up into another extension on the hourly. Divergence. We've got two very good levels of potential resistance coming up, this being one of them, second one being 125. Looks great. So good short opportunity pound New Zealand as well. Pound US I'm already short obviously. Slightly larger position just taken on this one, just as I say, to try and milk this a little bit faster down to these lows, just so I can get on top of this drawdown in the back. New Zealand dollar CAD short. This one at the moment is pushing hard based off of the Canadian dollar. So where we are right now, we've got this kind of trend which we are approaching the lows of. When we get back down into here, we're either going to get a bounce or we're going to get a break. This stinks of an area of resistance in the trend that we should start our next leg down on. When you look at the 2472, you get, regardless of which one it is, you get these pops outside of it. Yeah, so there. This is where it changes colour and turns white. So you get these pops outside of the moving averages. Yeah. The 24 is acting as a resistance to keep the trend going. When the trend is starting to weaken, we start to test the 72, but we quite often get the 72 doing the same thing before it switches direction. Yeah, so there's the 72. You can see we pushed outside and pulled back down again. So that's kind of where I think we're going with it, but there could be a change in direction coming. The New Zealand dollar is actually a very small economy. It's bolstered by the Australian dollar economy. They hold each other up. The CAD is obviously very, very strong, oil-based, but there's a lot of commodity and oil out of the Aussie and New Zealand as well. So these things are quite driven at the same time, which is why you get a lot of this sort of accumulation. But when one of them takes control, it tends to push quite hard, as you can see. So I think there's a good chance this could start a next leg down. But where we are at the moment, it's not really of any interest. This is where the interest started when we got this big propulsion gap, and obviously we know propulsion gaps tend to get filled. This one's filled very nice and quick. So we pushed back up into there as well, that 3-bar reversal there where we started that downward move, that gap. We tapped straight into it, straight back out. So I like this short, but I'm not sure whether or not we're going to get the bounce there. So difficult one at the moment. I like it short based on current trend. Still, yeah. So you know, this is what I'm talking about. We push down, we push outside the 72, we don't get anywhere. We push down, we push out, just touch the 72, don't get anywhere. We push outside the 72, don't get anywhere. We're pushing outside the 72. Potentially, just history going to repeat itself. But we can sit here, as you can see, we can sit here for a couple of weeks, accumulating, ready for the next move. So I still like it short based on Canadian dollar strength, but at the moment, as I say, the CAD is weak. New Zealand dollar Swiss, this is the mother of all flags at the moment. Waiting for it to break. I really think it will break as well. But we're waiting for Swiss franc strength. There's the rate announcement. It's trying its hardest to get back into this gap. This move on the Swissy was so strong, and any weak currency, which New Zealand was at the time, in fact most currencies were at the time, it just smashed it to pieces. We got this massive move which was many ADR, so was that 368 on a 55 ADR, which is like 7 or 8 ADR. Huge push, very difficult to get undone. So we're flagging at the moment any short opportunities you can see I would take on this. Hourly is probably going to give you more opportunities to get in short. In fact, you've only had a handful really. So you had one there, you had one there, you had one there, and you've got one there, which is played out. So any opportunities to get short on it, would get short on it. New Zealand dollar yen covered, New Zealand US short still based on, obviously, as you can see, the trend. The US dollar at the moment is waning. This evening is going to be a real decision factor for the US dollar. We will hopefully see it either pump or dump. I'd like it to make its mind up at the moment. The market is very, very unsure about the US dollar and what direction it's going in at the minute. So at the moment we've got a strong US dollar, we've got a weak New Zealand dollar. We'll look at the US's in a minute. We've just broken back down below support, so we've retested this level here, came down, tested it, that high there really, tested it, slammed it, pushed, retested, and we're dropping back down into new support. We've got this big area of balance here where the market was happy to trade. We've got to pump through all of that to get a new low in, so there's an awful lot of resistance going to be there because we broke out of this accumulation long, so there will be a lot of people defending long positions in there. People, I say, banks, institutions defending longs based on US dollar current weakness. And as I say, we're getting back into this area of balance now, and it will be dependent on what happens with FOMC and whether they are bullish or bearish as to whether or not the US dollar pumps or dumps. It could well be a neutral and very much saying exactly what we said before, which was the soft landing is now going to be harder than we thought. The recession that wasn't going to happen is likely now to happen. If they go along the same sort of lines as they did on the last one, we probably won't get a lot of movement. So again, we just don't know. We're waiting on the US dollar basically. US dollar CAD pushing at the moment, which is lovely. So we've got some strength on the US dollar. I'm long. And as I say, I've been long on this for a while. I've been taking a little bit of drawdown heat on it, but I banked tons on this last week. I like it long still on a retest of these highs on US dollar strength. At the moment, we've got no US dollar strength. We've got no Canadian dollar strength either, hence why I'm stuck in it, not going anywhere. So FOMC, we could see a nice big liquidity run. So I'll be setting TPs on this, which I haven't done at the moment, but I will do now while I'm here. So setting TPs on this, what should I go for? Might as well go for the highs. Up there, all positions. So if FOMC pumps, we will probably go for a liquidity grab up at the highs. If it dumps, we'll go for a liquidity grab down at the lows, in which case I will enter another long position down there, and then I'll get out somewhere in here. But yeah, at the moment it's just accumulating. So, you know, the lower we get, the more aggressive I get, as you can see. Yeah, just playing the natural ebb and flow of the profit take entry, profit take entry, profit take entry. Just keep milking it, and all the time it keeps range bound. Keep milking it. US dollar Swiss is a really tough one. The pound odd ADR. This is Australian dollars on its backside. The price action on this, I haven't been in the US dollar Swiss for a while. This price action is odd, just odd. I really don't know what to make of it at the minute. I'm bullish Swiss franc, so I should be looking for short opportunities on it. But I find it very difficult to short the US dollar. I did, when this was all happening, I did find it very difficult to short the US dollar. Now, I'm a little bit more inclined to be short US dollar, but I've got US dollar longs on at the moment, so I can't really. So, but I liked this down here, where we got the bounce, but it's not been particularly convincing, the bounce. So I'm undecided on direction on this. At the moment it looks like the Swiss franc is taking control, in which case then we should be looking for shorts and the RSI extensions to the upside. Hourly you had some yesterday. So there was an opportunity to get in yesterday, only just touched it though. And as you can see, there's not really been many opportunities for shorts on this at all. Back here is kind of when that leg started, so you'd have got on 4 hour on that. But on the hourly, you literally had that, and you've got one now. So looking at support and resistance, we've got multiple areas basically here where we could get reactions. So all these lows could be the catalyst for next leg down. And we're right there, right now, just got extended on the hourly, and it's just starting to roll over. But the US dollar is long at the minute. It's quite strong at the moment. So yeah, tricky one, very tricky. US dollar Swiss and US dollar yen I've covered. Don't like it, no idea. Yens I'm just steering clear of at the minute. Bitcoin, fallen out of love with everybody, Bitcoin. So it started to fall in line with the indices. The indices are pushing nicely, and Bitcoin is still not going anywhere. This thing is dead on its feet. Nobody's buying it, nobody's selling it, nobody's interested in it. Everybody's holding their losses on it. It's just horrible if you're in Bitcoin at the moment. It's coming down. It's coming down to origin as far as I'm concerned. So as soon as we get the next dump on these indices, as soon as these indices, as they are looking like they're doing at the moment, we've got a beautiful potential 3-bar reversal forming on the DAX. If this thing closes bearish today, this could be the start. as soon as that next leg starts on these indices to the downside, we're going to see Bitcoin drop. Yeah. So assuming that is going to happen, we're off to the downside. So I'm not interested in Bitcoin. No, I haven't been. I've never have been in crypto. I don't trade crypto at all. I hold crypto. I hold Bitcoin only because I've been paid in Bitcoin and I had to pay for stuff in Bitcoin, so I had to build a Bitcoin wallet. So I started buying a bit of Bitcoin every now and again, and then it just proved what I thought. It was a fad. As soon as big companies start pulling out of Bitcoin and stop accepting Bitcoin, you know they're not interested. And as soon as you don't get adoption from the banks in something, it's not, you know, the whole economics of the world works on money. And as soon as a new monetary system comes out and isn't adopted by the banks, you're stuffed, because the banks aren't going to turn around and go, nah, we'll let that take over and ruin our entire industry. It's not going to happen. So although there's a good chance it will be around forever, you know, or for a long time, unless there is adoption at point of sale in shops with Bitcoin, it's not going to go anywhere. So it's just going to come down. It's really struggling. This is the mother of all flags as well. I mean, this is just the biggest flag in the world. You're just waiting for that flag to break. When that flag breaks with one big candle like this, which is what's going to happen on the indices as well. When that happens, the entire world's going to either short it speculatively to make money, or people are going to go, yeah, I need to be out of this because this looks like it's coming down. Either way, that's going to cause a cascade effect. Same as happens with our indices. Yeah. Cascade. Cascade. Market walks up the stairs, falls down the elevator shaft. The drops are way faster and harder than the climbs. Always have been, always will be. It's just human nature. It's just the way we see things. We see things down and we see things falling like gravity faster. It doesn't happen that way, obviously, but we as market participants, banks, institutions, they're all human beings at the end of the day. They all see it in the same way. It's the herd mentality. Right, so that's it for today. I've covered everything. I banked 0.39% this morning. I've got tons of profit sitting on DAX. I want this thing down to 2% today. That is my goal. I'm not worried about oil particularly. I will get into some more oil. My lot sizing on this is normal now, apart from that one position, which is this one here. I think that's that one. Yeah, the 160, yeah. So this is my normal, this is the abnormal lot size. These two are normal lot sizing. These are just over 0.5% each, which is fine. Not particularly worried about it. Actually, no, they're just over 1% each. So I'm not particularly worried about those at the moment. That can all come back very quick. But as I say, this DAX is my main issue at the moment. I'm just going to manage that one. Okay. Oil's on the turn by the looks of things. Just move that buy stop down to there. Look at that limit order. Missed my limit order. That thing goes from there, I should be cross. This whole market's making me cross at the moment. Anyway. Right, that's it for today. I'll be back tomorrow morning. There's no live room on Friday, by the way. I'm off out on a day trip on Friday with the kids, because it's half term over here. Half term, summer holidays over here, as it is most places at the moment. So I'm not here on Friday, just to pre-warn you. I'll let you know again, obviously, tomorrow. So be prepared for this afternoon. Retail sales on the US dollar. We may well get a big push on new retail sales ahead of FOMC. We've got crude this evening as well. Big forecast drop on crude inventories. So if this comes out worse than that 0.3, we will likely get a spike in oil. So that's a big drop from 5.5 to 0.3. So I suspect it'll probably come out a little bit higher than 0.3. But even so, inventories are dropped. So we might get some decent movement off of oil later this afternoon as well. So lots of news catalysts. We've obviously had a lot of news catalysts this morning which are moving the market, mainly on the Aussie New Zealand side of things. And this afternoon it's all about the US dollar and oil. So lots of movement, and then tomorrow morning we've got the Aussie dollar unemployment rate figures, and that's it for the week. So there's nothing else tomorrow of any particular importance. Got a few oranges in there, but nothing that's going to make any massive movements. And then there's nothing on Friday really. We've got retail sales for the pound, which are reactionary figures. They're not predictive, so we don't tend to get a massive amount of movement off of US pound retail. Sometimes it does. It depends. If it comes out massively different, then yes. But we're forecasting 0.1 and a 0.2. With previous 0.1 and a 0.2. I certainly haven't spent a lot of money, so I'm not expecting it to go up. Not that I'm obviously a main contributing factor to retail sales. I spend a lot of money on Amazon, but that all goes into the US pocket, not into the pound. Don't pay tax over it, is it? So no news really after today. The whole week has revolved around Wednesday. We've been gearing up for this Wednesday movement. So fingers crossed today we're going to start to see stuff kicking in. But we will see. As long as this DAX comes down, I'm going to get some decent reward today off the DAX. So I'll be using the vast majority of this profit off of these moves to this one down here is I class this pretty much as an orphan trade now. It's going to be very hard to do drawdown control on that. So my focus is going to be starting drawdown control here. The reason being I want to limit any further damage. So if we do go further into drawdown on the DAX, I want to go into drawdown at a slower rate. So I'm reducing the speed of drawdown by reducing the position sizes. Yeah, this one's going to be hard to do drawdown control on because I'm sitting in $750 on that. If I banked $750, that's gone. I'm getting rid of it completely. In fact, I'm also anticipating taking anything up to a 2% loss today. Just to get on top of this DAX. It's my own stupid fault for over leveraging myself. You never learn lessons. You still do it. You still every now and again start walking on water, and then you suddenly go, I can't walk on water, and you start to sink and you go, I remember why I didn't do that. So yeah, that's basically where I've got myself into trouble. So my options are, if I can get up to about $500 to $600 of profit on multiple positions on the DAX, I will reduce these down by 50% and leave that one intact in the hope that we start to get that indices drop. When that indices drop comes in, I will be scaling in as we drop, and I'll be using those profits to reduce that back down. When that's back down to normal sizing, I'm fine. Same as I've done with oil. It's just a case of doing the damage control, which is why we call it drawdown control. We're controlling our drawdown. I like using simple terms. I'm a simple person. Right, so that's it for today. I've still got 13% to play with this month, so you know I'm well over target. My target is 10%. We're only on the 17th of the month, and I'm 3% above my monthly target. So I've got plenty of cash in the bank to muck about with, which is why I'm happy to take a bit of a loss today. If I can drop this down to 10% by Friday and get the drawdown back down to 2 to 3%, where I'm the very most comfortable, I'll be happy. But fingers crossed FOMC pumps the US dollar to hell, and that will dump the indices to hell. So that's what I'm hoping for, a very positive outlook on FOMC after last month's negative outlook. So we'll see what happens. Alright guys, so that's it. I'll be in the Telegram group if you need me for anything else today. Other than that, I'll be back tomorrow morning 7:50. I'm not around for FOMC because I'm in a class. I'm always in a class at 6:30 on Wednesdays, which is annoying because I'm always not around for FOMC. But I'll post obviously when I get back home. I'll have a look at what's happened with FOMC and see if we can dissect it tomorrow and decide what we're going to do with the US dollar. All right, have a good one. Hopefully it's profitable. If you need anything, let me know. I'll be in the Telegram group. Stick any analysis or anything you need help with in there, and I will see you tomorrow morning.